welcome everybody once again. I hope you had a very great weekend again. So it's a very busy week this week. So we have CPI, PPI, and FOMC. Nothing today. So this is really nice. I would recommend, I know we've got Forex Factory and other websites and stuff. But on TradingView, they give a really good economic calendar, and you can just switch this on here and you can have a look at everything that's here. You can take a look at all of the details and everything, seeing what happened previously. Of course, we've had nothing going on with rate cuts for a long time. And we do have, so core inflation rate being the CPI, that is expected to basically be down a small amount since last month. Okay, so we're looking at year-on-year 3.5%, month-on-month 0.2%, which means that inflation is coming down slightly, slightly. No rate cuts expected. We did, of course, last week have the European Central Bank announce the first rate cut that they'd had since 2019. The market hasn't really reacted too much to that at this stage. I think the big drop that we had wasn't really because of that. The euro did okay last week, but I think we might see that there's some interesting stuff going on with the after effects from that ECB rate cut. And then, of course, we have PPI coming in on Thursday, which is, again, expected to be down. So these are when you're going to get your volatility. These are in UK time. So I've got my chart. Well, actually, it is, UK time, UTC. So looking at this, so we've got UTC +1. I should actually move this because I have my charts on UTC standard. So to stop myself getting confused, I should probably switch this to UTC over here, but we'll leave it at that. UK time, before New York Open, CPI, FOMC. I will probably go live for FOMC, I usually do, and then PPI on Thursday. So they're the things to be aware of. Now, monthly time frame is looking neutral. There's nothing really to discuss on here. If we're looking back at where our previous all-time high was, we're above it right now. We are continuing to consolidate around / above that all-time high, but monthly is giving us nothing. We've just got a wick above. There's a very little beneath. So that's one thing that we do have to be aware of. Like when you do zoom in on this monthly, it has been majority up for the month so far, for the week and a bit that we've had, and we've not really put in much of a wick below, but it's okay. That's fine. We've had months like this before. When we are in a bit of a bull run, we don't have to be putting like a deep wick down, but that is something to be aware of if we do start to drop, because I think it's kind of 50-50 here. Where the market as a whole is, whether what we saw on Friday was weakness, or whether we're looking at this as just being a shakeout before new all-time highs again. The weekly, so the weekly again closed. I mean, despite the fact we did have that big move down on Friday night, it didn't come back down to weekly open. It only retraced about 50% of the week's price action, so it really wasn't that bad. You did have a move down that tested close to it. But yeah, weekly wasn't particularly bad. You did close below the previous week high, and we had spent some time above there. But again, just fairly range bound here, so nothing too crazy there. Cake saying, yeah, of course, 50 viewers now. Like, we've got 23 likes, so please do hit the like button. Make sure you're hitting the like button. Hit the like button. Do it. Daily time frame. It's all very balanced up here. So there was, Friday night moved up. This is when we took out the highs, those previous week highs, and that was a really nice, really nice opportunity to go short. I did take a short position there, and we do find ourselves right now, I think, basically just right in the middle. Price just consolidating. Oops. If we put the 0.5 on here, then we're just consolidating midpoint of this little range and holding around that point of control. So today we have hit a previous day open. This did pull back and hit this. So if we, whoops, that's not daily, previous day open. I will do that. But yeah, high time frames aren't are relatively unchanged at this stage. What we have where things are looking a bit more interesting here is on the 4 hour and below. So from the 4 hour, we can see it's clinging on. Right? It really is clinging on. So we had this 4 hour gap. This is where I wanted to see price come down to. And I did take the short position. All right. That got closed early. In fact, it got closed before we hit target here. I took a scalp short, closed that as I'd basically wrapped up trading for the week. I thought I had wrapped up trading for the week. Clearly what happened on Friday night didn't. There was more to come. But yeah, the 4 hour actually this gap has been holding. So from a 4 hour time frame, when you're looking at the gap here, it has not yet closed back below where this gap is. So it's like the big move down that we had on Friday. You close back above, you come back down again over the weekend. We're coming back down again today. And there's been no inversion of this gap yet. That hasn't happened yet, or maybe it won't happen at all. And also what we are now left with is this gap above. So it is really like we are literally just right in the middle here, stuck right in the middle of this range at that point of control. If you draw an anchored VWAP, if you take that back, this was from our previous week, but if you take that back towards these highs, we're right there. Okay, we are right on it. As recently, the trend has been up most recently, and we have not had a change of like any breakdown in market structure. This is simply corrected inefficiency from previously. The reason we've got a big wick down here is because it hit liquidations, it hit stop losses, it created a lot of panic. There was obviously a lot of emotion in the market on Friday evening. I have no idea what all the hype around that Hello Kitty, I always call him Hello Kitty, Roaring Kitty guy is, but I tuned in to watch it. It was weird. There was a ton of speculation last week. Everything then fell apart, and I think it was just the case of when there is an opportunity like that to just completely just clear the decks. Like, of course, everybody was watching, and at that point, once that stream finished, everyone was there, done for the weekend, probably closed their charts. Maybe they have a ton of leverage up at the highs because everyone's like, oh my god, it's so bullish, we've got this Roaring Kitty guy back, GME's pumping, short squeeze, we're going to stick it to the hedge funds. And then they switch off their computers, they go out, they have a few beers, poof, market crashes, everyone panic. So I think it was one of those situations. Actually, structurally, it's fine. And this is 100% an area I'll be looking to bid until we start closing candles significantly below 69K. And that's what I was saying all through last week. We had overall, a very boring week. It was just chilling at the highs, and we were just waiting and waiting and waiting for it to take these highs, essentially, because we knew the probability was there that it would. As soon as it took the highs, okay, short position, but we weren't really expecting a massive crash. I wanted to see the move down into these lows, okay, because we put in these equal lows here. So you had the low on Tuesday, you had the low on Thursday. We wanted to see those swept. They were swept, but then it went a bit further down after that. And we've not yet changed anything at all from these time frames. So actually looking at this, like I said, the first time I've really been looking at this, it's chill. It really is. It's fine. What you don't want to see, like I say, is price starting to come down here and start to trade through this area. Like you can trade down, but you got to reclaim quickly. A 4 hour candle close below 69K would probably be bearish-ish. and then we can be looking for a move back down to this weekly level, and looking at this as a larger correction. But if this does move up from here, absolutely, yeah, there's no reason to think that this couldn't just continue to float back up after everyone got so wrecked on Friday night. So we'll monitor this, but yeah, we'll monitor it, see how it goes. But as long as we're holding above that 69k, then it's looking like an area in which you could be targeting long positions with an invalidation at that Friday low to target new highs once again. So you'd be looking at something that looks a little bit like this. Now, what you could do is you could still hold this trade, and then if it does start to come back down below 69, and you've got volume there, so if you start to close below these high volume nodes, everything does line up at 69k. It's like we're just consistently there all the time. Then what could be done is a hedge could be taken that then aims for lower, so that you're not losing this whole move. And then if it does get back above and you get some choppiness and some weirdness, then you have like a decent spread there, and are managing risk accordingly. So yeah, it's trading in the middle of the range. It's trading at the POC. It's opening positions at the point of control at the midpoint of a range. Never the best thing to do, but there are some setups there if you would like to. Now, going down here 1 hour. Let's clean this up. So we did take those lows. I'll just take that one out. I'll keep this on my chart for now. I think I'll just remove that one. Weekly open, coming right down, testing the Sunday open. We do, of course, have the weekend lows just down here. So if we do come a little bit further down, then we've got those weekend lows. Let's remove the anchored view up as well. I need to change these highs. I've actually changed this already on the Woo chart. Slow. There we go. We'll switch onto this chart. So yeah, weekend lows are there. That is the weekend low, isn't it? From, yeah, okay, you got Friday. And then what we have is a few little gaps. So we've got previous week low, 67,600. Monthly open, 67,550. A little 1 hour gap down there. 68k. That's what you'd be targeting if you are short. You'd be looking for these areas. And then that would be a nice sweep of those Friday night lows. And then if you're looking for a long, you're not expecting for any of these to be filled. You're just looking for a move back up, which absolutely is something that could happen. You reclaim weekly open at this stage, and it looks pretty good. The reason we're seeing this move down this morning is just there's was that Sunday highs? You haven't come up and taken the highs here on perps. So you do also have weekend highs that look quite interesting here. But yeah, that's kind of Bitcoin, right? There's not too much more to discuss. We'll have a look at the other indicators. 50 EMA. Actually, this is nice. All right, so this is just so far tested that 50 EMA on the 4 hour. Not too bad, right? You've been holding this, and it's still holding now, so that's okay. And until you start to see this roll over and start to trend back down again, start to be red, then it's acting as support. That looks pretty cool. VWAPs from these lows, okay, we're not there. We haven't dropped that far, but if it does just dip a little bit lower, then you do have confluence of those VWAPs. So the support looks decent. It really does. It looks decent here. You're at point of control of this upper range on spot, at least. If you look on perps, most of the interest is a little bit lower, but that can shift higher. On perps, we're outside of value area still. On spot, we're within value area. And then you've got this point of control down here, which is back towards that weekly. Yeah, I think it gives us some nice levels. But by looking at this, I still believe that could have just been a shakeout, and we can see some higher prices. Now, busy week coming up, so we could get some stuff messing around, but eventually I do believe this resolves up. If not, we know where this is going at 64k. So that will be if this does start to roll over, we lose these significant levels below, we start to change market structure. 64k, start to deal with all of this, is where this likely ends up. Now, I'll take a little look on the liquidation heat maps. Pretty contained. 3-day. Yeah, just a ton of people, just both sides can get swept here. And then we still have a ton of liquidations above and get sorted out. Refresh this. CVD. My internet is really slow this morning. I mean, as you'd expect, right? Some weird choppy weekend price action. Spot selling over the weekend. People just being like profit taking, selling because they have no money left and they got liquidated, so they got to sell spot. Open interest is down after being up. Okay. So you had some aggression, some selling this morning. When you compare that to spot CVD, which has been flat here, and then you look at the perp CVD, you certainly had some aggression down earlier. So open interest increasing with price moving down and CVD moving down. That then did result in some nice stops being hit. So of course, below these lows that we put in on the 9th, on yesterday. So took out that previous day low. And that was a previous day low. Not quite a previous day low, but we took out these lows where this move had started and getting a decent bounce here. So that's interesting how a lot of this moved down. You just run a lot of stops. Take out that OI in the weekend. Again, we're not really looking at anything too significant here. Essentially, I'm trying to find stuff that's interesting, but we are just chilling sideways at a POC. So everything I look at is just like, it could go both ways. Yeah, that's it. That's all I have to say on Bitcoin right now. We'll move on. So we'll move on. Whoa.